All right, Karl Hughes, CEO of Draft.dev. Thanks so much for joining me today.
Yeah, thanks, James. It's good to be here on a Friday night. I like doing this is a fun way to end the week.
Yeah, no doubt. We're running full speed. We were just talking about we're both running marathons at a sprint speed. And a meaningful way to do that is to continue to work until 6 p.m. on a Friday night when everybody else is
Yeah.
probably out having happy hour. So good
Man,
on
I don't
us.
consider this work. This is like what I do for fun. If waved a magic wand and I could do what I want all day, it'd be talk to other entrepreneurs about what we're learning. So let's do it.
Yeah, absolutely. Well, I found your story very interesting. I think it's very different than all the other agency owners that I've interviewed so far, which you came out of the software industry and really from like a tech background, but would love to hear kind of like how you came out of that, what you saw as an opportunity to form Draft Dev, and kind of how you got up to where you're at today with being CEO.
Yeah, sure. So it's about 6 years ago, the pandemic hit. I was a software engineer. I mean, I was the CTO at a very small startup, but I was effectively a software engineer managing a couple other engineers. It was very early stage. So we had raised a little money, but we were not really equipped to weather the pandemic where, investors kind of for at least a few months were like, well, we don't want to put any money out there till we know where this is all going to go and if the world's going to even exist in 3 months. So there was a dry spell there for deploying capital between I don't remember, March to June or so of 2020. So anyway, the company was running out of money and we were just like, well, we got to do something. We started laying off people, kind of cutting our hours, doing whatever we could. And I started up Draft.dev in the meantime. The backstory on it was I was a software engineer who liked to write. And that's an unusual, like sort of intersection of skills. And so companies would often reach out to me because I wrote on my personal blog or wrote guest posts other places. They'd reach out and say, hey, Karl, would you write a blog post on our product? And sometimes I'd say yes. Sometimes they'd offer me money. So I kind of knew that was a thing. And so I figured I'd just do more of it for a while until the pandemic was kind of settled down and we figure out what the world looked like. And it turned into a business. I mean, it was 50% accidental and 50% once I saw the market demand, I was like, let's go for it and see what this looks like. So it sucked me in super fast. And I had been at these high growth, or at least attempting to high growth startups that, for the last 6 years of my career. So like I kind of knew the playbook you're supposed to run when the market starts to pull you in and shows you have really good product market fit. So with Draft.dev, just quick on what we do content marketing for companies that want to reach software developers. So as you might imagine, if you're marketing a super technical product like a Kubernetes cluster or a logging tool that developers are going to use or an IDE and development environment, you kind of need marketing material that speaks to that audience because your buyer is very technical, very savvy. You can't talk to them using general purpose SEO content is like really tough to make work because it's just so fluffy. It doesn't get into the real technical meat of the problem. And so what is interesting about that space is the content marketing looks like documentation in a lot of cases. So we'd write detailed tutorials about how to use the product to solve really complex problems. So anyway, that was a really unique value proposition for these companies. And because at the time there was, all their marketing dollars were getting diverted into digital marketing from they used to do event sponsorships and community sponsorships and, in-person meetups and all that went away for a few years. The pandemic was a huge boon to that business. And we just got pulled into the market and grew really fast. So year zero, when I was just starting it out, was maybe 50,000 in revenue. The next year was 1 million. The next year was 2.5 million. I couldn't replicate, like James, if you asked me to replicate that, give me 10 years, I doubt I could hit the same like growth trajectory on an agency that was bootstrapped. Like it was a right time, right place, right offer. Again, I think I was okay as an operator and am okay as an operator, but I'm not that good. So there was a lot of like the market just sucking me in. And that was a really fun experience. Also, a lot of challenges, almost ran out of money at least a couple of times and had a real hard time hiring and firing people at the beginning and trying to shuffle through people to figure out who could actually do this. Lots of learnings, but here we are 6 years later, the company's still doing well. It's shifted a lot in its model and how it works. We've bought another company. We're working on another one now. So a lot has changed, but it's been a fun journey.
Yeah, I think you found a starving audience is really what you found there that was underserved and not like nobody had fulfilled that because of the technical requirements that your average marketing agency is not going to find. So you really blended, like you said, that skill development that you had of being able to be a good technical and combined with your writing capabilities was like the perfect combination. That's oftentimes what entrepreneurs find, right? Is like you need to piece together one, two, three, four unique skills that's different than a competition or creates a new product or new service to
Yeah.
really fulfill. And it
Yeah.
sounds like that's
If you,
exactly what you did.
Exactly. Have you ever read, there's a book by Scott Adams, the guy who wrote Dilbert, that describes this idea of Man, I wish he calls it skill stacking. So the idea is like you're not going to be the number one best basketball player in the world. You're not going to be the number one best actor and entertainer in the world. But if you're pretty good at both those things, you might go play for the Harlem Globetrotters. Like it's a weird intersection of skills, but obviously there's a need for it in a certain context. So you kind of think of yourself like this complex being. I'm not going to be the best software engineer in the world. I'm not the best writer in the world. I'm not the best salesperson in the world. But those three combinations I'm okay at, and not many people are okay at all three. So I'll just like lean on those, and that was how I kind of got my start. And I remember realizing that the other competitors in the space were all software engineers who were just like really engineers. They had no interest in growing real businesses around this. It was like freelancers, freelancers with maybe a couple contractors here and there. There's just no real heavy hitters trying to take this as a real market and actually grow a business and operate it in the way that I wanted to.
Yeah, absolutely. I think that the challenge with that, though, for a lot of agencies is that for a service-based business where it's dependent on your unique skill set, is how do you scale that? How do you
Totally.
hire, manage, systematize that what you can do on your own? How do you do that, and how do you scale that out? What were some of the challenges? Because it sounded like you had some challenges along the way, but transitioning from that CTO type job to agency life, which can be a bit of a roller coaster at times, very
Yeah.
project dependent, very dependent on recruiting, hiring good staff since you are very service based. But what were some of the key learnings that you learned over the last 6 years on like how to develop skills in other people to do what you were already doing?
Yeah. So early on, one of the things that I committed to myself, because I knew that problem was the common agency pitfall, was like do all the work yourself and think that your smart brain is the reason that clients work with you and that's it. And so I basically figured out like or thought to myself, like, how do I optimize against that? So I started tracking my time from day one and I said, I'm always going to work 50% of my time on sales and marketing. And once I fill up that bucket of 50% of my time can go to client services, once I fill that up and I have more clients, I'll go hire people. And even if they suck and they screw it up and I have to, I lose clients because of it, like I'm always doing business development, always half my time on BD. And because of that, like we're always going to have a pipeline. So I won't worry too much if people screw it up and I'll just have to teach them as they go. And that model worked really well. And I stuck with that for the first year or so. And that was, I would say that was probably why we were able to grow because I was just constantly hitting the pavement. Even when we had a full roster of clients, it was like I was never going to stop. And I remember the first article I had another engineer write. It was terrible. The first version came back to me and I was like, I can't return this to a client. So I stay up like all night just fixing it and redoing half of it. And like, it was still barely the adequate. But like at the end of the day, like I was continuing to spend that 20 plus hours a week on business development and sales, and that paid off long term. The other bit of it was I've always had a fairly like organized mind as being a software engineer, and so I started to break down the process of creating this content. And now we do a lot of stuff with AI tools, but 6 years ago the world was very different, and so I basically realized that engineers don't need to do the full cycle of work here. They just need to be involved in part of this because part of this is like editorial, part of this is copy editing, part of this is account management. So when I tracked my time, I'd actually break it down into those buckets like that. Which of
Mm.
this work needs to be done by a technical writer? Which of this work needs to be done by an editor? And as I saw those buckets fill up, I knew which role to hire for. So I started with like fractional editor because I hated the detail work of editing, and then started bringing on these writers, and then started bringing on account managers, and then salesperson eventually. And so just like that's how I scaled it and stacked all these different roles as I went. And eventually we started hiring managers, and that was tricky. I mean that's probably the hardest kinds of roles to hire. And we were talking about this a little before. Like you hit these growth sizes where you need managers, but you can't really afford them, and your margins get cut really hard for a while till you kind of bounce through that. And that part is still like that's an ever present struggle, I think.
Yeah, that is the growth challenge always is when's the right balance and timing of bringing on new. But to your point, I think as long as you're already working on that 50% of the time or enough time on filling in the pipeline, then those things grow together because it really comes down to how do you grow your supply and your demand at the same rate. And I think what I love about what you just said that I don't hear from other agency owners, and I think it comes from your CTO background, is you took a very engineering approach to how to build this agency, which is like, let me time block, fill in, and then break down each different step and then fill in the gaps along the way, which I don't hear many agency owners doing. I think that a lot of people could learn from that alone is like how to backtrack all the different steps your agency does, systematize, and then figure out what are all the gaps and then fill those in. with the right people. Did you also have to hire and like look for people similar to your background that kind of had the technical understanding to do that specific skill of writing, or were you able
Yeah.
to kind of recruit and hire anybody to do
So
that?
right. So this is what was really tricky. At first, the thought was, oh, I have to find people like me who have really good engineering and strong engineering backgrounds and really good writers, and they're pretty good communicators on a call so they can get in with a client and understand their product. And I realized like that's just a unicorn. Like it's not that there aren't more of me. There certainly are people like that, but they're too expensive. Like they're just too in demand. And so what we did instead, or what I did instead, was I just looked at those three skills: client communication, writing, the like the engineering part of writing, and the writing part of writing. And I said, how do I break these three skills down into three different roles and then hire fractional people who I can't afford? So I'd go to an engineer who maybe was in India or Nigeria, somewhere whatever, with 10 years of experience, but they work in a country where it's cheaper. And I asked them to write an article. And of course, their English is, like it needs work. So we then hire a developmental editor here in the US who's $50 an hour. And so not nearly as expensive as, again, hiring a full-time US based engineer to do your writing and edit their own stuff and then communicate with the client. And so by breaking those roles down into like the specialties and then using geographic arbitrage, we can kind of like pull the price down to where we could actually, afford to offer articles that I think at the time it was probably about $1,500 per article for a client. But that basically allowed us to have the margins to make that work.
Yeah. Got it. Makes sense. And then just to kind of put to like a big part of agency, especially small to mid-sized agency startups trying to grow, is what's the right growth model and strategy? At what point should you attempt at different client acquisition strategies or growth strategies? But what was your approach of like, what do you find is still the best like client acquisition strategy? Is it still content marketing and trying to get inbound traffic? Have you found it's outbound email, cold email, LinkedIn, ads? Like, what have you found has been like good, especially for you have a very specific audience, which can be
Right.
helpful, but also challenging
Yeah.
because
Yeah.
there's
Yeah.
not as big as a pool, but you know exactly who you're going after,
That's
probably
right.
where they are.
Yeah.
What have you found like works best?
Yeah, you nailed the problem and the solution both. It's identify that very specific audience that you want to attract. So again, going back to like when I started this business and it started to take off, I realized, okay, I want to optimize for the things that other agencies fail to do. One is the founder, like everything's dependent on me. I don't want that. So one of my first KPIs was how do I take a whole month off in this business and be completely removed and it still run without me? That was one of my big guiding KPIs to get to in the first few years. And then the other one was how do I make this business not rely on one single channel for marketing and sales. So typical since starting Draft.dev, I've bought an agency and looked at and evaluated a bunch of others. And what I realized is about 90% of the small agencies we look at have only referrals as their only source of leads. And it's always based on the founder's personal network. The biggest opportunity, honestly, as an acquirer for a small agency is go build two or three other channels because you're immediately going to like double number of calls you have and you're going to get better base of referrals and all that. So intentionally with Draft.dev from the early days, I was like, I want to build second and third channels eventually. And I want to start them now, even if they don't lead to anything. So we started off right from the beginning, writing blog posts about what we were doing content marketing, started writing guest posts on other places, building up partnerships with people who we could distribute content through. I've always been very prolific on LinkedIn, and so that's always been a channel. We started to experiment in year two, probably with some paid acquisition to see if any of that would work, cold email to see if any of that would work. And we've had different strategies that have worked at varying degrees at different times, but it's kind of developed into a split of about a third SEO and LLM optimization now. So we show up in LLMs a lot now. And then a third of it is referrals and warm leads from clients and past clients that come back or people leave their company and come to another one. And the last third is kind of a blend of everything else, which is a lot of, cold social events. So we've always been very intentional about building multiple channels because it's just so hard to hire a salesperson if they have to originate their own deals plus close inbound. I mean, like from day zero. I mean, like you want your salespeople to get to a point where they can originate their own deals, of course, but like on day one, like it's super hard. This is such a specific niche industry that you really want to give them as much ammo as you can. So my goal was get us to 10 calls a week already happening before we hire a salesperson. Then it's easy to have a salesperson come
Yeah.
in and start closing warm leads, and then they can go out and learn how to prospect. The other thing I'll say about that is we practice now a very account-based kind of marketing approach, because this industry is very small. It's a few hundred companies that we really want to sell to. And of course, there's a long tail of like startups and small size companies that we don't really target, but they come in organically. But in general, there's a few hundred companies I want to have connections with. And every week I go through and make connections with the right people, or get intros, or invite people to do surveys, dinners, calls, blah, blah, blah. Like just want to constantly be making touch points at those core companies that we want to work with. That
Yeah.
that tends to work over time.
Yeah, absolutely. Like really all those are really just different touch points, different
Yeah.
ways to get in front of the
Yeah.
right uh potential
Yeah.
client.
Because nobody makes a $50,000 purchase because they saw one ad on Google, right?
No.
Like, it's so naive to think. I think this is one of the other pitfalls of like marketing agencies. They'll go out and they'll be like, "Oh, we tried LinkedIn ads and it didn't work." Well, you had no collateral on your site to show why you're good. You had no follow up. You had no email drip campaigns. You had no ongoing touch points with these people. It's like, of course, your ad didn't work. Like you missed the whole mix that you have to go into to do this.
If a marketing agency struggle with that, that is laughable. Like there's just
Right,
like the
right,
number one that
right.
knows you need multiple touch points. You need a
Yeah,
follow-up process. You need all of those steps that happens. But I guess working on your business is difficult when you're also working in
that's
it.
right.
I think
Yeah,
that's the real big challenge and struggle. But yeah, I agree. I think you need all of those different channels. I think that's always a big struggle though, is that maybe it makes it feel like the plate's too full, that I have to do content and also outbound and also make relationships and a network and connections and all of that. I think that can be quite
yeah.
overwhelming for a
It's
lot of small
overwhelming. I
sized
totally
agencies.
agree. Yeah,
Yeah.
absolutely.
That's what's like, can you start with one and then scale that up and then start adjusting and adapting and growing
Yeah.
from there?
Yeah. Yeah, I mean, I think that's the ideal if you can pull it off. It's hard because these channels, a lot of them take a long time to
Yeah.
build. I mean, content is notorious for this. It's like if you get any results, like as far as leads in an agency off of 3 to 6 months of content, you're doing great. If you get, a few leads in 12 months, that's probably pretty average and fairly expected. In 24 months, it should become a channel that you can reasonably attribute to regularly. Yeah, rely on. And that's the problem is like most people give it 3 months to test and then they're like, yeah, it didn't work, and they
Yeah.
quit.
Yeah.
And
Same with
yeah, well,
brands too, right? Like, what's
yeah,
your advice to like brands? What do you think? Here's an interesting question I think I wanted to ask, but like, what do you think you guys do that's unique for your like software companies you think that other brands and your like average advertiser could learn from? Do you think you guys like go more in depth with like who the audience is because you have to write at such a deep technical
yeah.
level?
Yeah, totally. We actually go in, we use their product and learn it so that we can actually talk about it in a way that's well informed. So our engineering manager will come in and have calls with their product team. He'll have accounts and various people on our team, depending on who's writing with them, will have accounts on their platform. So we actually get to know it and use it. It's interesting because the need we fulfill is a lot of marketing teams at these very technical companies are made of people who are not actually developers themselves. They may have used to kind of been developers, but they're not actively writing code on a regular basis. So we come in as the technical experts that can help make them look good, because their biggest fear is going to their CTO someday and with a piece of content or a social piece or whatever and saying, "Hey, can you check this out?" And he goes, "This is complete trash." And then they look like an idiot and they get fired or they're afraid of that. So we come in and we're like, "Well, we got it. We've got engineers that will actually vet this stuff and make sure it actually makes sense and make it really good." And then you'll look like a hero. They'll be like, "How did you do this without taking any engineering time?" And that's exactly what we want them to have the reaction of. So
Yeah, absolutely. As an agency owner, and like I always look at myself as like we're a service-based industry, is that my goal is to make the marketing director at the brand like a rock star and a
yes,
hero. That they got something delivered that nobody was expecting, that exceeded expectations. Like that is always my goal KPI for a brand client experience because
that's right.
I think that's
Preach
what
it.
they deserve
Yeah.
and like that's what you have to deliver if you want to
Yeah, like, go above and beyond in your first quarter, right? Like, you get that first quarter to try to show them something, and your SOW says you're supposed to do X, Y, and Z. Like, do X, Y, and Z plus ABC. Like, kill your margin on the first quarter. Just show them what you can do, and then tell them, how you can up the budget from there and make it even better. But yeah, I'm with you. Like, you've got to make them look good. That's your whole goal because they're hiring you because if it goes bad, they want to make you look bad. They don't
Yeah.
want to look bad for you. So you got to you get a
You're gonna be
this
the
is how
easy
we live and die.
scapegoat
Yeah,
regardless.
exactly.
So you
That's
might
right.
as well go for a client retention strategy of let's over deliver to
Right.
make sure we can really deliver some great results. And like we do it just from like we could do it in a way like we obviously focus on paid media, but like our goal is like sometimes our goal is like we're working with awareness clients who are focused on awareness and we look at their CPMs or cost per reach that they got before and we're like, we're gonna crush those numbers. We're gonna go and figure out can we get added value? Where can we buy extra inventory? Like, well, how can we deliver more? Or if it's a CPA goal, we'll kill our margins in order to make sure we crush their CPA goal to start and like start on a high note in order to make sure that we can over deliver from day one. Like that is always the goal is, but I think agencies can get stuck though. I've seen where they start out great and then they kind of slump afterwards.
Totally. Yeah.
And then like a year later, it's not what it was from the beginning. So I think it is a balance and challenge of like you got to set high expectations, but then continue to deliver on those and find the right balance
Yeah,
for
absolutely.
clients.
Yeah, for sure.
Um, what a big part of what you do, and I wanted to talk to you about was acquisitions. So like one strategy that I keep hearing, I go back and forth on as an agency owner is what's the right growth model once you hit certain kind of benchmarks. Is it to just continue to hammer the phones, find another channel, acquire more customers? Is it to grow your services so that you can service more to your clients or to a new different industry or vertical? Or is it go buy and acquire an adjacent, agency that provides a different service, a complementary service, or your same service and you're acquiring their customers and clientele? What have you found just through your experience as great like growth models for agencies?
Yeah. Man, you mentioned like all the things and they all are right. There's no right answer to that. Like there's no one answer. Like I've met people who've grown huge agencies, much bigger than mine, off pure organic, like hustling. I talked to a guy, I run a podcast as well called Retain Trust. And I talk to agency owners. Talk to this guy who's got $100 million agency and he is still in there dialing for dollars essentially. Like he grinds. He's like, I'm working 20-hour days. He just loves it. And
Yeah,
I'm not him. I'm not going to be that guy,
sure.
that's not my style, but like it works. So like whenever somebody says you have to do X or you have to do Y, I'm like, bullshit. There's a million ways to do this and no way's right. Just figure out what works for you and you can sustain long term because if you can't sustain it, you're not gonna stay in business long enough to like really get the lift you need. Um, so what's worked for me? What happened was 3 years ago, my business partner and I were talking about like, what do we want to do to grow? Because this is a very niche industry. Like there's no $100 million business called Draft.dev. It just doesn't, there's not enough work there. We could have 100% of the people who outsource content in this space and still probably only have a $10 million business. So it's just not a big enough industry for us to be like, this is a huge thing. Like, and I wanted to have a big thing to shoot for. I may not get there, but like I'd much rather be trying to aim at some really big goal and exciting goal that gets me jazzed and I know is going to be a challenge every day than to just kind of like live status quo. So as we started talking about that, I was like, well, what if we go out there and buy other small niche companies like this and we start to like apply some of the best practices we have at Draft to make them fairly hands off and we start to share some back office resources. So our initial model 3 years ago was like, let's build kind of a holding company for these small agencies that are very specialized and figure out how to operationalize that and build playbooks for all these different things. And so we went out and bought this company called the Podcast Consultant that did podcast production and editing, mostly for financial advisors and financial service businesses. Very niche thing. The guy had been an editor at the Wall Street Journal before. And so the good news was he had a great network and then a lot of shows, about 80 shows that he worked with, and most had been around for 4 or 5 years or more. So it was a great sticky client base, really high retention and low client concentration. We were like, this is something we could, he had never spent a dollar on marketing or sales. So I was like, this is something we could crank up, I think. So we went in there and did that. Now that was one way to grow. The interesting thing is that we never really merged those two businesses. We kept them separate. So we've got two separate little entities that kind of operate independently, but we share some things like accounting and marketing services across the two companies. And that helps us kind of have full-time people that can apply the same playbooks at both companies and best practices. We have very similar sales playbooks at them both. We have very similar like kind of operational oversight and KPIs and things. So it does make it easier to kind of run two businesses. The other thing that's cool about running two separate businesses, you get to see you get to test your theories twice, because often I think as entrepreneurs, we get to test a theory once on one business and then we're like, well, it did or didn't work based on that one small test, but that's a terrible sample size. Twice is, or two is still not a great sample size. It's better than one. So I like having places where I can test things in two places and see. And that's part of the goal long term, is to continue buying on companies that either operate independently like this or ones we can merge in. So that was our strategy. And I don't know, we're talking about this in February 2026, James. So in 2 or 3 years, I might have adjusted this a bit more, because I think we're seeing that these really small companies still have a lot of challenges of running them independently. They still kind of need a visionary leader, and you can't really afford to hire somebody at, 500 grand a year when you're only pulling in 2 or 3 million in revenues. We're kind of like in this spot where we're trying to figure out, like, what's the leadership model going to be for these small companies? We're going to have a shared CEO across several of them, or we're going to end up building them to a point and maybe selling them off and just kind of focusing one at a time. I don't know yet where that's going to go, but that's one way to do it. And it again, like, the acquisition growth model is really appealing if you're comfortable with the risk. I'll kind of I can kind of model out how this works financially, because a lot of people aren't familiar with it if you've never looked into it. With buying agencies, you typically can get them at a 2 to 4x multiple of earnings, which means that, like, whatever the net profit plus what the owner pays themselves, you probably pay 2 to 4 times that. It can be structured in a lot of different ways that can be really favorable to the buyer, especially if the seller needs to sell, like they have to retire, they have a health issue, they have a partnership issue, and they need to get out in 6 to 12 months. You can get pretty good deals on them. If they're good businesses with solid margins and they have, a good spread of clients, there's no reason not to pursue that kind of thing. The other thing you can do is you can basically use debt to buy them. We used a SBA 7A loan to do the last acquisition, last big one. And the way that works is it's a 10-year loan. So the good news is the term is so long that you can make your payment pretty low. And what that allows you to do is take the cash flow from the business to pay off the loan. So we typically are cash flowing 2 to 3 times what we are going to pay in loan payments every month. So if you think about it, as long as you're willing to take a little bit of a pay cut on, like, the margin you actually take home, making an acquisition and using cash flow from the business to pay off the loan makes it like an extremely good investment, especially if you're able to crank up revenue some or improve margin some. So a lot of business owners don't really know about this. There's a book called Buy Then Build that people in the MBA circles have been reading for years about, like, this kind of acquisition strategy. And it, in my experience, works as long as you don't tank the small business that you buy, which,
Yeah.
again, there's the risk you have to be willing to take.
Yeah, there's still the risk of, like, it still has to serve, it still has to be able to continue to operate and function, especially there's always, challenges, especially for agencies that so many of them, like you said, are based on the entrepreneur, the founder, and their referrals and networks, that if you can insert maybe you can insert it from, like, learning what you did at, like, your current agency, can you implement the same client acquisition model in the new agency? But if that doesn't work, then, right, there's a potential risk there, so I guess that
Yeah,
all comes down to the process, the due diligence process of really understanding whether or not you can implement your systems. But
that's
do,
right. Yeah, or
where's
you
the
could lose half your clients on day one at the
yeah,
turnover. It's scary. Yeah, but yeah, so far so good. Knock on wood.
you mentioned kind of like stress testing some of your like what worked or what have you any insights from that? I know you're testing out on a few that you've kind of acquired over the last couple of years or so. But what have you learned as like what are good models that have continued to proven to work? And then has there been any things that you did at Draft.dev that just really didn't apply or work at any of these new agencies?
Yeah, couple things that have been interesting. So I'll go to, like, one very specific. Last year, we did a test with both businesses for doing cold email outreach, and we had a pretty dialed in, like, we hired an agency to do it, but we had a pretty dialed in ICP, pretty dialed in messaging that we helped them with. And in Draft.dev's case, we have a very technical, like, tech savvy buyer, and never got any traction on cold emails. Just didn't work. Now, I do get some traction on cold emails, but when they're more indirect, like, I'll go to, like, a leader at one company and say, I just had a conversation with so and so at that company, mention your name, that kind of thing, because it does come up. And, like, those sorts of things that are warmish kind of emails do tend to work, but the blanket cold ones, sending out 150,000 emails a month, just did not work for that space. It worked okay on the podcast consultant side. We didn't get any in the 3 months we did it. I would say we probably got a couple of small deals out of it. It was not enough for us to keep doing it, but it was interesting to see that it was different in each business. And, like, there are parts of it that I took away that might work if we kept tweaking that. We just decided to redeploy the resources elsewhere and kind of double down on things that were already working. But that's the kind of like attitude we take to like any marketing tests. And I think, there's always like an opportunity cost when you're looking at marketing channels. And when you have some that really work well, and again, SEO and AEO have worked really well for both businesses, we really apply the same playbooks at both. And that has worked. We just keep doubling down on that because it seems to, we haven't hit the end of that yet. So I think that's been good. The other one is events. So learning an event strategy at one business, and then we've kind of taken the same model and pushed it on the other one, has been really good for building up our marketing. Some things on the operational side too, like we use OKRs and a weekly sort of team. I guess it's like a overall stand up kind of company wide stand up cadence, and having them work the same way at both companies makes it really easy to manage and not have a ton of like uh, mental overhead when you're switching between the two. I know what both of them look like, and I know what these OKR sheets are going to look like, and I can compare them side by side, and it makes it really easy to to evaluate how each of them are doing and evaluate people evenly and things like that. So yeah, there's a lot of these things that like you get a 2-for-1 kind of deal when you adopt similar systems at multiple companies.
Yeah, you get some consistency of relevant information, so you're not completely changing your headspace from one thing to another that are completely different. It's somewhat consistent, at least the same numbers, metrics,
Yeah.
focus that can be consistent. Okay. Interesting. And so I guess with that, those are really a lot of like tactics. Is there any like fundamental strategy that you look at like implementing between like all agencies that you think are relevant?
Yeah. Like I kind of mentioned this already. Like the big opportunity is going from founder only marketing strategies and like, channels to like
Yeah.
strategically, how do we broaden that out? The other one that comes to mind is moving from services, like a very production focused dollars for output, to more of a retainer and more of a value driven model. This is if you've been in agencies a while, you've probably seen like agencies at the big size will often have like a monthly $200,000 retainer that covers all the things they do, and they don't really get into this nickel and diming over like, well, you said you were going to do this month, but it went moved to the next month. Instead, it's just like, you just have us, and it costs this much a month, and that model is really interesting if you can get yourself to a point where you can sell it. Because the hard part is when you're really small, companies look at you a little more skeptically, and they're like, well, I don't know if this is worth it. Like, tell us what we're getting for our $10,000 a month or whatever. And so with both companies, we've moved from you pay us money and we give you output, to more of a like ongoing retainer, and where we manage more of the strategy, we manage more of the distribution. We're more flexible in what we can return to them every month. So it allows them to give us like different kinds of projects depending on their needs. So we kind of stay around longer, and we don't have to go back for a new SOW every 3 months or something, which really can kill you if you're in big companies where it takes months to go through that procurement process. So I think with both companies, we've kind of moved to that sort of model, and that's been a big strategic shift that has grown our revenue per client in a big way. We're still working on it at the podcast consultant. That's kind of a newer effort, but it's moving in the right direction.
Yeah. And did you find like a lot of these agencies like don't have these things in place? Like they don't have
Absolutely. Yeah.
OKRs, they don't
No,
have
yeah. Yeah, oh, yeah.
weekly
No.
stand up,
No, no,
they don't
no.
have the multi-channel, right? They have the owner referral network for sales,
There's
right?
nothing. Like,
Yeah.
all the agencies we've looked at, and we've probably looked at over 100 at this point, when we were doing the first acquisition, and then we've done a couple other offers, and we bought another one last year. But with all of them, there is very little infrastructure. These are $500,000 to $2 million agencies. They're fairly small. They're very owner dependent. We know that's a risk. We know that's part of what we're getting. But we also know that's the opportunity, is to take them from, hey, you've got good cash flow, but the owner does everything and works 80 hours a week, to let's keep your good cash flow, but let's figure out how to get the owner out of there. There's just so many things that could be optimized. I mean, when you came into the podcast consultant, the team had never met with the owner about like what the long-term strategy or goals were. There was no documented goals or strategy. It was just, well, I'd like to make more money this year than last year, and like that was it. So I think our expectation when we come into these small companies is like, we're starting at zero as far as that kind of strategic planning and like a roadmap and tracking of stuff. But as long as there's cash flow there and sticky client base, there's something. That would take me a long time to build on my own. So it's got some value for sure.
Yeah, absolutely. And that, I mean, that's really, I guess, what you're acquiring fundamentally when you go acquisition, right? Is you're like get the cash flow, the client base, the service, maybe some talent, anytime you go to a service-based industry.
Yeah, I think you were asking about the whole like, do I grow organically and just, hammer down on the channels I have versus do this? To me, the big reason to do acquisitions is if you want to access a new client base that you don't have any examples of. So I'll give you, again, a little anecdote that you can imagine. If I had, as the owner of Draft.dev, who works with all these tech companies, tried to start a podcast production business, I would have had to figure out who's my first customer. I mean, maybe we could convince one of our clients to start a podcast, but it wasn't really something they were doing. Maybe I could have hired a freelancer and started my own podcast and used that as a launch pad to prove I could do podcasts. But this whole journey would have taken years, to get to 80 clients. But instead, on day one, when we bought the company, I'm trading on the names of the top 10 clients we have. And they're all well-known podcasts that resonate in this industry. So I'd go, oh yeah, and we do invest like the best. And we work with capital allocators, and people go, oh, really? You work with them? Like, yeah, we'll work with you. Like, that's who we want to trust, is the guy who works with them. So you immediately build this credibility that you can lean on versus, again, starting from scratch. You have to build that credibility, and it just takes years. There's just no way around it. Now, I do have a big, I have a loan, like a house loan that I'm paying off for that, but that's the trade-off.
Yeah, absolutely. It's a faster growth model, really what it comes down to, right? You accelerated, like you said, 5, 10 years. It just came with a loan in order to accelerate for that. But if the financials and you make the math work out, then it can make sense. Yeah. I'm curious what your thoughts on this. This is a bit of a pivot, but there's obviously like a lot of pressure, it seems like, on SaaS right now. You're seeing a lot of valuations plummeting, a lot of challenges in the SaaS market. What's kind of your perspective of the SaaS model company, tech driven companies right now? Where do you kind of see that as like, where do you kind of see that industry going and what challenges that they're
Yeah, man. This is the question that keeps me up at night, or some version of this, to be honest, because we're right now both businesses are doing fairly well, and they're we're in a good spot where they're kind of growing. But I'm more worried about the existential long term of what AI is going to do for or against agencies, our clients, the kind of companies we can work with. I mean, I don't know that it's bad. I don't put value judgments on that kind of like long term future stuff. It's more of a, how do I actually stay on top of this enough and not too far behind, but also not so far ahead that I'm selling something that's not relevant yet. So I'll give you, again, I was just thinking about this morning. It's like, eventually, maybe there's a world where um, agents are the ones who go out and buy products for companies or small startups or something. Like, you deploy your AI agent to go figure out which is the best option for me, and then negotiate price, and then it acquires the SaaS or the tool or the software or whatever. Maybe that's a world that happens, but like, if I start selling agentic marketing right now today, it's too early. Like, nobody's actually looking for that. Like, it's a cool idea, but like, nobody, how would you even do that? We don't know yet. So there's this like too far ahead thinking that I get into sometimes. And I'm like, okay, I got to pull it back. What's the like little step you take to get slightly closer to that, where we stay relevant or ahead of the curve, but not so far ahead that we're irrelevant? And I'm thinking the same thing about SaaS. Like, I don't know what's going to happen to SaaS companies as a whole. There'll be certainly some categories where people just build the things in house because it's easier to build in house. But that's kind of always been true. So there's a little bit of me that's like, people say like maybe AI will take away the need for agencies, but not every company wants to fully adopt and learn these AI tools. Some of them will just want to outsource it, just for convenience, for bureaucracy, for political or security reasons. We work with, I'm sure you're similar, like we work with some big enterprises. And
Mhm.
the question outsiders always ask me is, well, they could do it. Like, you're a $2 or $3 million company. Of course they could do what you're doing. Like, that's their marketing budget for a month, like what do they care about hiring you guys? And I'm like, well, yeah, but there's a lot of risk involved in this. And you think about the mid-level manager who makes the decision to bring us on, or the director even who brings us on. They're very risk averse in relative terms. We as entrepreneurs think this is obvious. You could build this solution in a day. But in reality, these people don't want to put their own ass on the line just to get some blog posts, right? Like, that's not really what they're up for. So it's much lower risk for them to bring on somebody like us, who's a single vendor that has a proven track record of doing this, than to try to go hire out the team that does this at scale on day one. So I think that's always going to be the case, whether you're talking about SaaS, you're talking about AI taking over agencies. Like, there's always going to be some subset of the market that wants to use an external vendor versus build it in house. So how do you stay relevant as the external vendor? Whether that means you have to use the AI tools to be more productive and get better output, better returns on your work, or you have to convince people that you've got processes that are 10x better than what AI could do on its own. It's going to be situationally dependent, but that's what I think about a lot.
Yeah. Absolutely. I think there's so much truth in everything that you just said right now. And everything I'm experiencing the exact same thing is that most of the enterprise level clients that we work with, they don't want to do the service based execution. And even though AI can do a lot of it, and they could probably hire somebody in house, it still does not make sense for them to do that, to hire an internal department and then have another oversight and grow that way. That is not what they're fundamentally meant to do. Like they are we work with healthcare clients that are in healthcare. They're a healthcare
Right.
business. They are not a marketing business.
Right.
They do not want to do that. They do not have the infrastructure, the staff. We've worked with companies in oil and gas. They are fundamentally an engineering for oil and gas company. They are not a marketing organization. They tell us that. That's why they bring on service providers. And until it's a click of the button for AI to execute a lot of these things to where it's as easy as writing a media brief and it executes and manages everything. Like for us, obviously, I live in the media buying space. Till they can write a media brief and then that automatically shoots out ads into everywhere and targets the right audience, and you don't have to log into any platform. Until that happens, which I think it may eventually happen. I'm not saying
Maybe.
it
Yeah.
won't
Yeah.
happen.
Yeah. Yeah.
It could happen, but
Yeah.
until we get there, they're still going to be dependent on service providers because they fundamentally do not want to manage those things. And I think that AI is really just going to offer more solutions to service-based industries to do more at a lower
Totally.
cost and
Yes.
serve their clients even better.
Yeah.
Is
I think,
everybody's dealing with
yeah.
fixed budgets they can't do
Yes.
enough with.
Absolutely. I think you're hitting on where I've been going with it, which is how do I use look, right now we're in this really unique spot where these AI tools are getting good enough to where they can replace certain parts of our human jobs, make us much more efficient. We can handle many more clients per employee than we could 2 years ago. How do I squeeze as much margin out of this while delivering more value than a freelancer could do or a competitor that isn't adopting these tools as quickly could do? There's a huge opportunity right now for agencies who are early on this bus that use these things really well to make a lot of extra margin and just do better work, to be honest. I mean, that's been the story of Draft.dev in this last year was we shifted from a very human centric, like 5 people were involved in every article. It took us 4 to 6 weeks to write a piece of content. I mean, it was very thorough and very good content. And we kind of had this like come to terms with the world we're in now where we're like, we can't keep doing it this way. This isn't going to sell. It doesn't sell now and it's not going to sell in 6 years from now. And so revamp the whole process around one engineer and really good AI, both prompting and multiple models checking each other, a whole bunch of tricky stuff that makes them really good. But like basically we got one engineer in the loop and about 2 hours of time and a couple bucks on the AI spend, and we produce twice as much content for every client now, and it's lower price and we're delivering more value. We're adding strategic offerings on top and distribution offerings on top, and it's completely transformed the business and like in a much better way. Now that edge we have right now may not last forever because other people are going to do the same thing. I'm not naive to that, but at the same time, like, well, you got to use it because that's the world we're in.
Absolutely. And I think you're on a higher end of the expertise of doing that specific task that even if somebody else tried to do the same things you do, you have, 5, 6 years experience of
That's
doing
right.
that
Yeah,
so that you can maximize the value of AI incorporated into your process because now you're just leveraging what you're already doing, but 10xing it because, AI allows you to do so much more. And I think that's the big benefit we've really seen is that AI's helped so much on the extremes. If you're really, really talented, uniquely talented at what you do, you can do 10 times more at the highest level with using AI. Or my more lower skilled entry level people, they can be brought up to speed much faster and be essentially like a skilled employee with no skills.
yeah,
So it
yeah,
really helps us to me at the extremes. I can bring new people up, get them really skilled really quickly or appear have more skills and then be extremely skilled on the other far end.
totally. Yeah, that's a good way of looking at it.
But yeah, it's an interesting tool and the challenge is really it's changing rapidly.
Yeah, yeah, yeah.
Every
I
6 months to a year, you just like the
I
claw
mean,
bot has
right,
overtaken of the agent. You can create an employee for with like a laptop and it can do all
right,
these tasks for you,
right.
right? All
I
these
think the
things.
key is like not getting too much FOMO because you have to remember, even us just mentioning Clawbot, I know it sounds we think everybody knows about it because we're hearing about it all the time in our little echo chambers. But the reality is like, I mean, it's going to take another 6 to 12 months before my wife's talking about it or my parents
Yeah.
are talking about it
Yeah.
or whatever. And even then, the version of Clawbot that's out there now is pretty unuser friendly from like a general consumer perspective. Like, yeah, an engineer can jump in there and do it and get a ton out of it, but like it's got to get down to a pretty simple level for every average person to use it. And I think that there's a bit of a curve there that we underestimate when we're in tech every day. I was making this and having this conversation with my wife. She started using Copilot at work. She works in healthcare, and that's the only LLM they're allowed to have touch anything because it's cordoned off. And the version of Copilot they have is like an older one, so it's just terrible. And
Yeah.
in relative terms,
Sure.
it's like 12-month-old technology, but it's terrible today in today's terms. And yeah, you just realize like, yeah, it's going to take a while before we get the latest and greatest in industries like healthcare, like you say, oil and gas or manufacturing. Like, yes, they're going to get there. Don't know what the timeline is, but it's not tomorrow. So chill out. You don't have to get it all perfect right now. You don't have to learn every tool the moment it comes out. You probably give it 6 months and then actually start to like leverage it because it'll be a lot more useful then anyway.
Yeah. I almost want to go back in time and talk to people like at the dot-com bubble
Right.
change and be like, did everybody think their jobs were like going away because the internet was
They,
started, right? They're like, financial
yeah.
markets are going to be gone. This
Yeah.
market's going to be gone, right? Like, I think there's just going to be an adaptation. You get, I think, a lot of fear mongering that happens
Yeah. Oh,
where
yeah.
it's the extreme because that's what gets clicks and views and comments and all the
Yeah.
interest and everything. So we'll see what happens. But yeah, I mean, in my last question, like any other thoughts or perspective on kind of what you see upcoming, either like in your industry, the agencies you're working on, what brands, advertisers should be focusing on? Like, what do you kind of see as the next, 2, 3, 4, 5 years is going to be the big focus?
Yeah, that's a good question. I do think there's this edge right now for companies that are relatively early to adopt AI in their production and their kind of client service workflows. I think right now that's the biggest opportunity if you're an agency is to improve your margins by adopting AI. I do think, in my experience at least, it kind of has to come from the top down. I've had very few employees who raise their hand and say, "Yeah, I'd like to automate part of my job away." It's a scary thing to do, and I kind of see why. So I think you've got to like come in as the owner and try to explain how this stuff's going to be useful and show them before you start like expecting. I don't think you can expect your people to come in and say, "Yeah, we want to eliminate these 3 jobs because we have this really cool AI workflow." It's just not going to happen. So I do think that's something that we as owners have to pay attention to and learn to leverage or hire people to leverage for us or whatever you're doing. The other one that's interesting, a lot of people in the M&A space talk about is the silver tsunami of like people who are baby boomers retiring, and maybe that's less true in agencies where I know it tends to attract a kind of young to middle-aged crowd. But I would say that I've seen this some anecdotally already. Like there's a lot of agency owners out there who have fairly big agencies that they've got to retire someday. And there could be an opportunity if you're willing to jump into the M&A space to do that. If you've got local corner agencies that have been around for 30, 40 years, that owner's probably on their way out at some point, and it's rare that they're passing it on to their kids these days. So there's opportunities for buying companies where owners are retiring or getting close to that point in the next 5 or 10 years.
Yeah, absolutely. That's a big one. Is the boomers
Yeah.
retiring, go
I
to
mean,
retirement age.
everybody exits. It's just
Yeah,
a
everybody
question
has to exit.
of are they alive when they exit or the other way?
Father Time's undefeated,
Right.
you
Right.
know?
Yes.
Actually, my last question I have to always ask is if you give your younger self one piece of advice, what would that be?
Man, yeah. Something I am only learning to appreciate in my 30s that I couldn't appreciate in my 20s, maybe even if I gave myself this advice, I wouldn't appreciate it, is that consistency over time is much more powerful than short sprints of energy and effort. And so many people burn out by either the short sprint method or, we were joking about sprinting a marathon. Like, yes, but also like really what matters is every day waking up and doing that sales activity, that grind, or whatever it is for you at the moment, like making those, like working on hires, working on evaluating more companies to buy, looking at like how we improve our processes one more bit. And instead of thinking like, oh, if I just get to that next hill, it'll all be over and it'll all be easy. It just isn't true. Like if I look back at myself 5 years ago, um, if I was back in those shoes, I'd be like looking at myself here in the future and I'd be like, man, that guy's so successful. He's figured it all out. And now here I am at this point and I'm like, oh man, I have so much more to figure out. Like I'm never going to be finished.
It's a
So
journey. It's a
yeah,
journey that
exactly.
never ends.
So just like enjoying that journey and realizing that just keep one foot in front of the other one day after another. It's yeah, appreciate that and don't worry about the whole like I've got to do this by this date or else I'm sunk. It's not really true.
Yeah, that's so true. And one thing I'd add to that that I wish I knew earlier was just like the mistakes you make early in your career 5, 10 years go by
Mm.
and they're like blent. You don't even
They
see it
matter
on the
0.
radar.
Yeah, that's a
I
good
remember
one,
making
man.
mistakes early in my career and just killing myself over it. Like it drove me crazy. I was so upset. And then now, like the people who are involved and like what happened, like it's not even relevant anymore
Dude,
at this point.
yeah. That's been a huge mindset shift for me in the last couple of years has been looking at mistakes not as mistakes or failures or whatever, but as learning. Like all I'm doing is trying to mass learning opportunities because I'm not done and I've got 20 or 30 years of this career left. Like the faster I make mistakes, the faster I learn, the faster I'm going to be at wherever I want to go. So instead of looking at these as setbacks and thinking about the loss of them, it's like, no, that's a huge gain. I just fucked up really bad. That's great. Now I know not to do that anymore. And that I'll fuck up again in another month. It's like, because that shows you you're taking bigger and bigger risks and you're taking bigger and bigger jumps that you will learn from inevitably. There's so many entrepreneurs I meet who've been at this for 20 years that have gone to 0 and then gone to 100 million, like it's just, it isn't a linear, like protect your downside all the time journey. It's much more of a like, you're going to be way up, you're going to be way down, but get ready to ride the ride. And yeah, so anyway, looking at all those as learnings, I wish I had been able to do that in my 20s too. Yeah, it's tough.
Yeah, like had to go through it, but sometimes you
Right.
get a shortcut. But yeah, the feedback loop and then the bigger risk, the bigger the opportunity you get. So no doubt. Awesome. Well, it's been a great having you on. Great conversation. Really appreciate it, Carl. Anyway, anything you want to share of like how people could work with you or connect with you?
Yeah, no, carllhughes.com is my personal website, and I post on there every month or so. I've got a podcast called Retain Trust for agency owners. So I do that every 2 weeks or so, put out a new one, talking about all sorts of agency topics, a lot of M&A, but also a lot of just like best practices and stuff like this. Yeah, otherwise, I'm always happy to connect on LinkedIn and stuff like that too.
Awesome. Appreciate it, Carl. Have a good night.
Thanks, James.